Yeah, hi traders, welcome to the morning report, and this morning it's well worth doing one. There's some potentially some really good setups on some pairs, and we are at key inflection points. But before we go any further, let's go and get in and do the housekeeping. This video is only for educational purposes. It expresses my own personal opinions. It doesn't offer financial advice. By watching this video, you agree not to hold the distributors of this video responsible for any of the ideas and opinions expressed. Trading in the currency market is high risk, and because of the high leverage that is used in trading, you can stand to lose some or all of your money. If you have any doubt about trading in the currency market, or feel you need investment advice, then you need to go to a qualified and registered financial advisor before any investment with the currency market is made. With that said, let's get right into it. Got the housekeeping out of the way. The first thing I want to do this morning is take a look at the USD dollar index. The reason I want to have a look at this is that over the last 24 hours, or over the last past probably 2 days, we started, well actually let's go back 3 days ago. We saw the dollar index come up into here, then yesterday it came back down towards the bottom of this range, and today we have seen strength again in the US dollar. So we've had a day of strength, weakness, strength. Now, I'm looking at a weekly chart. Depending on who you listen to, some people are expecting strength in the US dollar, others are expecting weakness. And for every person that is expecting strength and can show you a good case for strength in the US index, and then correlating with that opportunities in the US pairs. For example, if this breaks this key resistance area, you're going to see further strength potentially in the US dollar index, and the next barrier it'll have to get through will be just in here. Now, if we get a break of this resistance area and it moves up well, then we're going to get some decent yardage on pairs like New Zealand US dollar South, the Aussie US South, the Euro USD we should see weaken, Pound USD we should see weaken. And for every person that can put up a case, and you can put up a good case when you do these videos and you do technical analysis for the probability of this happening, but for as many as you can find that say the US dollar is going to strengthen, there's just as many people that say the US dollar is going to weaken. So which is it going to be? And this is where your technical analysis comes in. The charts, the markets are going to do what they're going to do. They're going to decide. And so yesterday at the end of this daily candle change, it happens around about this time, and in actual fact in 30 minutes. Overnight when I got up, I had been placed into a trade on the New Zealand USD. Back to the daily. This is today's candle. So when I got up yesterday morning, the last 24 hours had seen some strength in the New Zealand dollar. and I had managed to get into a little bit of a trade. It went up and it pulled back, and it actually closed the day just sitting above this key area of resistance. Now the day started well. I was able to pull my stop losses into break even, and then as the day progressed, the whole thing turned around because the US dollar index started to strengthen. So let's see if we can help here. So I'm already in the trade. This starts to go up. It has to take this out if it's going to get serious about going higher. So it has to take the high of that day out. It didn't. It came up and retested that high. At that point, I'd already pulled my stop losses into break even, so no harm, no foul. It was a fakie, and I made a comment in the chat room that this could be a fakie. And I did the same on the New Zealand Swissy. And you come back to the dollar index, the reason why it was a fakie and it came back is look at the strength in the US dollar over the last 24 hours. Now it's come back off its high and looks like it's settling there, so let's not get too excited, bearing in mind that this is a trend line from the weekly time frame. If this continues, now you can make technically a case for the dollar to strengthen. Here's a head and shoulders right here, which 50% of the time points to a reversal. Crowns, head and shoulders. But if you base your trading on every time it forms a crown or a head and shoulders, and that's the way you trade, you're only going 50% of the time. It's scientifically proven that this analysis is only going to work just over 50% of the time. The market has to show you what it's going to do. It doesn't matter what your Fibonacci say. It doesn't matter what other patterns you use. They're there and they sometimes work. It's the market that decides, and key support and resistance. Support, resistance. If this breaks out of here, we are going to get some significant moves on pairs like the New Zealand US dollar. So what do we do with this? Okay, we're looking at the daily again, and I'm just going to mark in here key support resistance lines. We don't have to go stupid about it. It's just really, really simple stuff. And you know, you don't have to pay thousands or hundreds of dollars for somebody to hold your hand so that you can be a successful trader. Here's the deal. You can work this out for yourself. Resistance, support. The market curls up like a spring. Coils, not curls, coils up like a spring. If this is going to be a move down, and let's go back to several weeks ago. We'll do that in a minute. If this market is going to break out of here below, it'll start to go with continued strength in the US dollar. The market will decide. And to that end, all we do at the end of the daily candle change, the close of this candle that we are seeing here, because it's closing at this point below key support, I'm going to put some pending orders under the low of that candle. Now, over 24 hours ago, I've been taken north, but it was a fakie. And that's the nature of the market. It's not about, there's an area there. It's not about whether I'm right or wrong. It's about reading the market correctly. And when we get into these videos and we get all the emotional stuff coming through about how successful my strategy is, or these pattern traders are. Look, I sometimes I've seen professional traders' accounts upside down in the hundreds of thousands of dollars with some of the funds that they manage. As retail traders, we can't afford to do that. As retail traders, whether you've got a $500 account, a $1,000 account, a $10,000 account, if you have a strategy that works and you stick to it and you keep the promises you make by sticking to the rules, and then you have strict money management and you stick to the rules and you do the same thing over and over again, you will come out on the right side of the ledger. So today, after the close of this candle, as long as this closes, and you can see the close, as long as this closes below this area of support, I will have pending orders ready to go south. When I was taken in north, I mean, this is a bullish trend. It's not rocket scientists. Now I remember back here in September, I saw a number of people saying, get ready because the New Zealand USD is going to drop, and they had all the good reasons why. They could find head and shoulders and crowns and pennants and a break of the trend line. Look, the trend line was coming up here. Let's just say we had a trend line coming up through here. I'll get this right. Here we go. So we have the daily, trend line. We'll start from down here, and we drew it, and we had a double top. I mean, I was looking at this double top. Here it is here, boom, boom. And I think on the weekly chart, there was a head and shoulders. There's a head and shoulders here, left shoulder, right shoulder. It's extended right shoulder, big left shoulder. But here's the line, a break of this and a break of this. We're going south. In fact, I know of traders that every time it broke this to go south, they added, then they got upside down, and they added again up here, went down, added again up here, and they had huge drawdowns. And look what it did. It's just, here's the double top. All you have to do, you could have put, that's strong resistance at this stage. And look, it had 1, 2, 3, 4 attempts. And like I said, I know traders, when all these 4 attempts, every time it came up, they got in again, they got in again, they got in again. It's bullshit. Retail traders can't afford to do that. Emotionally, it destroys you. How many times did you have to go to take it south here? 1, 2, 3, 4 times, and it failed. It doesn't matter how good your target systems are, your patterns, your indicators are. The market didn't do it. These were all fakies. And you can make a good, this was a strong case, a good M top here. Why wouldn't it go down? It should be dropping, dropping, dropping. Well, it didn't. And just by putting resistance in here, you can see when it broke out, all you have to do, you get a close above the resistance, you put a pending order in, above the close of that daily candle in there. Oh, I've just stuffed it. Sorry. Just do that here. Right in there. There's the close, you put a pending order in there. and you just sit on it. If it's a fakie, it's no big deal because you're not risking a lot of money. You just pop your stop losses under the resistance sign. It's only 30 pips. It's a small loss. Look how much the run is. If it was a fakie, you would have lost your 30 pips. But look how far it ran. Over 500 pips. And you're still holding your upside down trades. That sort of stuff destroys traders that are retail traders. Emotionally, it destroys and undermines your confidence. I don't always get it right in the direction. But trading support and resistance is the safest way I know how to trade. I've bought all the courses, I've spent all the money on education, and I still didn't have enough information and understanding in the market after spending all that money and believing the promises that these educational institutions make to you. And all they do is they want more money. You can do this. You can really do this. And so here's the opportunity under that candle today. Now, I know I've ranted and raved a little bit, but it just really, really annoys me how people get on and they do their seminars and that, and they get all excited and they build up this case about how it's going to do it, and the probability is there to do it, but people get caught in the emotion. They spend hundreds, thousands of dollars at times and saying, yes, that'll be the solution to my trading. No, often it's not. Support and resistance. A good strategy and tight, disciplined money management. That's the key to success. I don't even trade a lot with indicators anymore because a lot of them just lag. I'm aware. I look at them as a matter of interest. I have them on my charts. But basically I trade support and resistance and I just follow the market. It's not hard. That's why I love the daily candle chart. It's just not hard. These are the runs I want. 500 pips, and more. And I'm learning to eliminate fakies. I won't eliminate them completely, but I'm learning to eliminate them. So now that I've been raving on for nearly 20 minutes, Aussie USD, here it is. Look, today it might be breaking key support. Now there's a strong support line just under here, and it's already broken it. These are all fakies. Now here's a strong case here on the US dollar, and let me squish it up, suggesting that we're going to get a really good move up. And you know that I've been talking about it and I've been watching it, and I want to say to you, with the Aussie US dollar, if we see continued weakness, then all it could be is a pullback. So if we continue to see the US dollar index really strengthen, this here all it could do is just come back and retest this area here before it moves on. I'm not jumping out of bed and suggesting that there's going to be a 500 pip move back down here or a 1,000 pip move, blah, 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 and you can do it on this pair, that pair, and every other pair. It's BS. The probability's there. Don't get caught up in the hype and the emotion of it. The reality is this: in order to see a decent move south on the Aussie USD, we're going to have to take out this at 76. Right now we're watching to see, is it worth having a little crack at this? If the US dollar strengthens and I'm seeing the US dollar strong on my currency strength indicator, and the Aussie weak. Yep, it's worth a little play down here, but I'll only be trading it to here, and then I'll be taking my profit if it comes down. So just be careful out there. You know, don't get sucked in by all the great promises. All of the all of the USD pairs are the same. Here's the euro. Okay, we've got a way to go on this, and you can see here, nice head and shoulders shaping up. A break of this line. You see, I've got pending orders under here, and after I finish this video, I'll be putting pending orders on the New Zealand USD to go south, the Aussie USD to go south. I've already got pending orders sitting here on the Euro USD, the Pound USD. It's got a way to go. It's got to break out this area here. It's not ready yet. It's still in a strong uptrend. If this comes down and trades down here today because we get a strong dollar today and tomorrow, that doesn't mean to say that we're suddenly going to get a massive move down here. If we get a break at this level, it could come down and retest some of this stuff up in here. If it breaks this level here, the first level of test will be down in here. And you can, on daily and weekly, you can mark your support and resistance out pretty good. That's fairly weak support. Here's the stronger support in here. You can see where price reacted. So if it breaks this, it could trade down to here. And it's worth having a go, providing you get good entries. And a good entry to me is where I don't have to risk a lot of pivots, but I'm looking at 1 to 2 trades. So there you have it. That's all I'm going to say. Just quick look at that. Look, the USD carry quickly. It could be setting up for a move up. And again, we need to see that strength on the US dollar. You can put trend lines in there and say, oh, look, it's broken the trend line. Now we've done this, blah, blah, blah. But this could just keep going sideways at around this level and then come back under here again. There's no reversal here yet. And if we get a decent crown or head and shoulders, that doesn't guarantee the reversal. We're still in a very strong downtrend without putting your trend lines in. I mean, if you run your trend line from here out to here, you see, here's the long-term trend line. And then you can go the short-term trend line. You can put these trend lines in. But just because you get a break there doesn't mean to say you'll go to there. Sometimes you do, and sometimes you don't. If we get a break here of this level and this trend line, then this is the area that'll be probably retested. And we're still not in a reversal. Once we break this here and this level, then we might be looking at a move up. But the US dollar has to strengthen to get this. So stay safe out there. USD SPSE, another one. And there could be potentially thousands of pips at stake here. Here's a really nice little setup. Head and shoulders. A break of this line here. Here's the neckline. Look at it. A break of that, a close above there, it's worth taking a trade. So go and have a look at them. You know, you've got your strategies. You guys are experienced traders. You know, hit a like or the subscribe button if you want to be registered to this channel. You don't have to spend heaps of money. It's real simple stuff, basic support and resistance, and let the market tell you what it's going to do. My analysis is only an idea until the market proves me right. And I'm happy when the market proves me right, but I don't mind getting it wrong because I'm not going to lose a lot of money. If it's a fakie, I've got a good risk-reward ratio. You know, if it breaks and closes above this line here, I'll just be looking for a risk of a few pips. Now, you know, I might need to put a stop loss at 120, 150 pips at times, but I just cut my lot sizes there. It's no big deal, but generally I'm looking for really good risk-reward ratios. If you go down to the 4 hour, you know that this is a resistance line off the daily, and you get a close above here, then you can make a move. So take care. Leave a comment if you want me to get in touch with you, and I can do that. And we'll see you in the chat room. Cheers.